Ladies and gentlemen, good day and welcome to Sharda Motor Industries Limited Q2 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Puru Agarwal, President and Group CFO from Sharda Motor Industries Limited. Thank you, and over to you, sir.
Thank you. Good evening to all. A very warm welcome to all the participants on this call. I hope you had a safe and happy Diwali and wish that the new year brings prosperity into everybody's life. This evening, I am joined by Mr. Ashim Relan, our CEO, and our Investor Relations Advisor, SGA. I am hoping that you have seen our results and have received our investors' presentation by now. The presentation is also uploaded on Stock Exchange as well as company's website for reference. Before discussing the company's performance for the quarter, I would like to shed some light on the industry. The recent festive season has brought some cheer to the auto industry, which is touted as one of the best festive period in the last few years. Also, with commodity prices moderating and other issues like semiconductor shortage and supply chain disruption easing out, the auto industry is looking forward to better performance in the near to mid-term. This is also substantiated with the growth outlook of the OEMs and new model launches planned in near future. On the segment front, we are seeing sustained uptrend in CV volumes, due to which it's a good sign as it reflects the overall economic buoyancy. The volumes for YTD FY23, that is April to October period, has been positive with YOY growth of 53% in CV. PV volumes also registered a strong growth of 37% during the same period. Another key segment, tractors, registered a 11% growth, largely driven by festive demand and recent government announcement for higher realization for Rabi crops. The two-wheeler and three-wheeler also registered for the period 14% and 19% respectively. In fact, the data suggests that all the segments in EV, that is two-wheeler, three-wheeler, passenger car, and bus, has surpassed the FY22 sales in April to August period of the current financial year. Having shared my thoughts on the industry, I will now move to operation and financial performance of the company. We registered a revenue of 698 crores, which is a growth of 19% as compared to Q2 FY22 and 11% on sequential basis. Our EBITDA for the quarter is rupees 76 crores as compared to rupees 61 crores in Q2 FY22 and Q1 FY23. It grew in excess of 20% on YOY basis as well as on QOQ basis. We improved our EBITDA margin to 10.8% in Q2 FY23 as compared to 9.7% in Q1 FY23, whereas our margin on YOY basis improved by approximately 40 basis points as compared to Q2 FY22. Our PBT for the quarter was 74 crores compared to Q2 FY22. After accounting for share in profit in JV and associates, the PBT grew by 29% and 22% as compared to Q2 FY22 and Q1 23 respectively. The PAT for the Q2 23 was rupees 55 crores, which is a growth of 31% and 21% as compared to Q2 FY22 and Q1 FY23 respectively. On the first half-year basis, our revenue EBITDA and PAT grew by 25%, 35%, and 51% to rupees 1,326 crores, rupees 136 crores, and 100 crores respectively. The EBITDA margin grew by 70 basis points to 10.3% as compared to 9.6% in H1 FY22. On the balance sheet front, we continue to maintain healthy liquidity position and cash surplus as on 30th September 2022. With this, we can open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Ankur Shah from Causar Capital. Please go ahead.
Yeah, hi sir. Congrats for the good set of numbers. Sir, a couple of questions. First is on the business side. Sir, from next year onwards, the RD norms will kick in, right? Is that true?
Yeah, hi. This is Ashian this side. Good evening. RD norms will kick in from 1st April 2023.
Okay, and in the RD norms, the diesel engine will have 25% increase in content and petrol will have 10%. Is that right?
Yes.
Okay, great. So has the inquiry and the order formation started, or will that take time?
Yeah, all our orders are already nominated, and now we have already, underway doing capex, etc. And we will be starting production probably in the end of Q4 of this financial year for RD norm products.
Okay, and from the viewpoint of RD and TREM 5, what will be the total capex outlay? Is there a figure which you all have planned for it?
It's all incremental in nature, so we expect our capex run rate to be at historic levels. So there would be no substantial increase for these norms. But of course, that just as we've gone historically, we would have a similar trajectory.
So in the range of 50-70 crores per year?
Not to give a specific number, but yeah, about that range you can say.
Okay, so this actually brings me to the question of capital allocation. See, considering the cash generation which we have been doing, it has been spectacular, and at the same time the level of capex intensity which our business requires, and the cash balance which we have, and the kind of valuations at which the company trades at. Sir, aren't you considering a serious buyback option, because your cash position is now almost 20% of the market cap?
Yeah. So we are definitely looking to utilize the cash surplus in the best possible manner. Our first preference is utilizing the cash for an M&A opportunity in powertrain agnostic products, and always there is few deals that we are looking at, but we don't have a fixed timeline, and we want to be very careful with the valuation plus deal that we go ahead with. But of course, we also want to return back the cash in a friendly manner, tax-friendly manner, and all kinds of options we are looking at in terms of how to do that apart from M&A activity as well.
Okay, great. Thank you so much.
Thank
you so much.
Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Karthikeyan from Suyash Advisors. Please go ahead.
Yeah, thanks for the opportunity. Good afternoon, Ashim. A couple of questions. One, can you talk about the outlook for the next second half, that is, in terms of the momentum on the standalone side, and also some thoughts on what's happening at the joint venture level. I'm talking about the CV joint venture. That is.
Sure. So on the H2 side, we maintain to have a good order book, and if our customers do well, we will do well as well on H2. But of course, things are dynamic given the global environment and all what we read in the news. But we will, in general, as a trend, it looks good. Coming to the joint venture in specific, you're referring to the Ebers-Parker joint venture, or?
Yes. I meant the Ebers-Parker joint venture. Because I see again another quarter of this 50 lakhs. So I'm assuming we are still in that break-even revenue level of maybe 45-50 crores. So just trying to understand.
So we are, in full focus right now for that joint venture is stabilization and bringing it to profitability. So I think we've come a very good way this financial year to at least come to green, right? And that showcased, I think, in last quarter and this quarter. But some issues remain there, in terms of the engines that they're selling to are not performing as well as the market is performing. So a lot of business development activity and other initiatives are underway also to further improve the performance. But I think full focus is to stabilize and really maintain and probably increase the profitability.
What would drive the growth in that part of the business? I mean, you've referred to the models for quite often, so I'm just wondering whether it's such a prolonged problem.
Yeah, so these are newer engines which we are supplying for, and as the Indian market has grown, they are still preferring the older engines. So we are working towards initiatives on how these products can be cross-used between old and new, as well as some other opportunities that have opened up in the market. But just given that first phase, the full attention is on stabilizing and really maintaining a green position. And of course, parallelly looking at these initiatives on how we can also improve sales performance.
Yeah. And any update on the Ebers-Parker export initiatives, either on the component side or any other initiatives on that side?
Yeah, right now, there's no material update because full focus, is to bring this part to success. And I think already a lot of good work has been done, but we want to remain focused on really stabilizing before we look at the next leap of growth.
Just one quick question on the H2 performance that you spoke about. Can you sustain the growth rate that you achieved in the first half?
Sorry, I missed your one of
I was asking you on the standalone side, can you sustain the growth that you achieved in the first half?
Yeah, so, it will totally depend on our customers. If our customers' numbers remain good,
based on schedules?
The schedules which we have are, only 1 to 2 months firm, right? But in general, the trend looks good. But it is totally contingent on market and macro environment and all our customers in general, right? So we are totally linked to how the customers will do. But in general, it looks good.
Okay, sure. Thanks. Let me get back in the queue. Thank you so much.
Sure.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Tarun Sancheti from Sanchay Nidhi Limited. Please go ahead.
Hi, good evening, management team. Am I audible?
Yes, you're audible. Good evening.
Okay. My question is very specific to your MHCV segment. So in this segment, from a capability building perspective, we have partnered with one of the very strong industry player, which is Ebers-Parker. However, till last quarter, our market share used to be close to 10 to 15%. In that context, I got 2 questions. One is that based on previous interaction, management has indicated that we are working on one engine platform for both of the large CV OEMs. The question I would have one part is that what is the percentage of CV market share those engine platforms account for?
Sure. So that is dynamic, and because MHCV segment is so concentrated in terms of engines, I think maybe just 5 or 6 engines drive 90% of the market, right? So it's very difficult. I don't have the latest quarterly numbers for how the engine performance has come, but we'll get back to you on the specific share. But it's quite dynamic in the MHCV segment when it comes to market share, just because of the concentration of value that is there in this couple of engines in the entire market.
Mm-hmm. Okay, so what I understand is that it's kind of a very concentrated and then there is a long trail. So the one engine that we are working on, is that part of those 5 to 6 engine models that you alluded about?
Yeah, they are the newer formation of those, they're the new generation of those 6 engines, right? So there is always some of the customers who are working on new generation engines. So we are on the new generation engines within those 6.
So is it right to infer that being a new engine platform, it may take some bit of a time, and even within being part of that 90% bucket, it may not be, contributing substantially to the market share? Is that the way to read it?
I think it is dependent on 2 things. One, how the new engines perform in the medium term, and that's totally based on market response and few other factors. And probably second is how we can standardize across engines and how we can modularize and how well we do on that, right? And these are initiatives, but they are medium-term initiatives, so hard to put a timeline on that. But yeah, these would be the 2 factors when we are talking of those engines in specific. But once we modularize, the cross-application really increases.
And follow-up to that would be, I think in the last meeting you mentioned about a new RFP opportunity coming up in calendar year 23. So if we have a visibility at this point of time, how big the market share would be for those engine platforms wherein you have spoken about the possible RFP?
Yeah, so as of now, there's no clear visibility as such. But, if we win one engine also, that could lead to a substantial increase because of the concentration of value over few engines. But there's no visibility, so I would not like to comment till we don't have something concrete.
Sure. And just to clarify that, and maybe, I can put it this way, are those new RFPs part of that 5 to 6 engine that you spoke about in the previous answer?
Yeah, they are.
Okay, great.
Now, they're a mix of new generation and old generation. So that's that as the years go and, the market trends in MHCV are changing, customers are looking at newer generation engines. But the response of older generations so far seems to be better. But there are, of course, tweaks that are happening in the market. So it's market response, and that's more towards the end customer. So we have limitation there. But yeah, that strategy is definitely to look at standardization, cross applications in this industry.
Sure, this was very helpful. Another question related to this JV itself is that based on some of the public available information, what we understand is that Airbus Parker also have a partnership in India for PV segment. Keeping that context in mind, our partnership on CV space, is that an exclusive one with Airbus Parker, or is there a possibility wherein Airbus Parker may perhaps work with another tier 2, tier 3 vendor in the CV space itself?
Are you talking CV or PV? A commercial vehicle or passenger vehicle?
Yeah, so our partnership is on commercial vehicle space. And I'm giving a reference that even for that matter, in PV they have partnered with someone else. So drawing a parallel to that, is there a possibility that within the CV space itself, our partnership is exclusive one, or is there a possibility that they may partner within the CV space with another vendor as well?
So, yeah, I think the previous partnership is some technical agreement or something which is maybe a decade or 2 decades kind of a relationship, right? And that's for the passenger vehicle space. Ours is for commercial vehicles. and we are, above the engine threshold, and with some exceptions, we are exclusively working on that. But of course, it is based on segments. So passenger vehicle, both companies are, free to do with other partners, and that's an old partnership they have. And in the case of passenger vehicles, we are a standalone sufficient company, and we have our own technology. So we play in the passenger vehicle and LCV segment as a standalone company, and we don't require any technology there.
Sure. Final bit of question, and maybe I can join back in the queue again. At least directionally, what is the future plan of the JV, and how long of an agreement does Sharda have with Airbus Parker at present? Is there a terminal, cut-off date to that?
Sure. So I think full focus is on stabilizing, right? So the joint venture, because of the pandemic, last 2 years, did not make good results. So our full focus right now is to stabilize, bring it to profitability, which we've been successful on. And we want to first finish that phase, and then we want to move forward in terms of the next phase of the joint venture. In terms of terms and conditions like this specific, there's nothing material that we can share in terms of the annual or whatever the program is. There's nothing material like that.
Mm-hmm. Sure. Thank you very much, and all the very best.
Thank you. Thank you so much. Thank you.
Thank you. The next question is from the line of Chirag Shah from Nuvama. Please go ahead.
Yeah, thanks for the opportunity. Sir, first I'll continue with the Airbus Parker question actually. Just wanted to understand what is the key issue with the engines that we are working on. Is it the cost shake? Is it the performance? Because industry should be willing to accept a new gen engine, right? Or a new gen technology in that sense.
Sure. So, that is something that, the end customer really has to articulate, because that's not our core competency on looking at engine response to the market. That's, for the truck and bus makers really to gauge. But they are, of course, working on various initiatives to improve market response to new generation engines.
And if you can indicate, this refers to which tonnage category? Is it in the 2 to 3.5 ton category you are referring to, or?
I am not aware of the tonnage that these go into, and what my understanding is that there is cross application between tonnages, right? So we, just being an engine focused company, we look at the literage, and I think these are above 4.5 liter engines.
About 4.5 liter engines. Okay. Yeah. Because it's slightly, and who supplies them for the older versions if you're supplying for the newer engines? You are also a supplier for the older engines, or is somebody else?
No, competitors. We are suppliers for the newer ones.
Okay. The second question is, again, if we just step back on Airbus Parker JV, since the time we have done the JV, it appears to be lagging versus what were the initial expectations or, vision that was set aside. And am I including the potential outsourcing opportunity also in this? What are the key reasons, and how are you addressing the challenges which gives you confidence that from here on, next 2 years, things will improve drastically?
Yeah, so I think, the joint venture was done in 2019, and really it's been a pandemic joint venture in terms of that COVID came 1 year after, right? So I think 1st April 2020 was the launch of BS6 and the products that we had, and we've really suffered through the pandemic. So, and the CV market was, of course, hit very hard, as well as travel restrictions, etc. So our full focus first is again to just be on phase 1 right now. I think stabilization is very important for us, and we are laser focused on that. And we first want to go ahead with phase 1, and then only even discuss phase 2 at this juncture, right?
Okay, because CV volumes are kind of almost there, right? 2019 levels. There is like touching distance, yeah. But our profitability is still not moving up the curve. That's the reason I was asking. Was it driving because of higher import content or anything else? So
it's just this what I just mentioned, regarding the new and older engines, right? And then because the focus being a new company and right after the pandemic came in, so definitely it's challenging to manage a new company in the pandemic. So that's why stabilization is very important, and we've been very successful in the stabilization. If you look from losses last year, it is at least now in green. Right. So I think it's a great first step, and we want to continue on the stabilization effort because the foundation has to be strong and then the growth journey goes.
So the second question was on the RD norms. You indicate 25% increase in diesel and 10% in petrol. I presume the combination between own manufacturing and bought out would stay the way it is, or it is going to see a change?
There's no change as such, apart from just that the norms have additional content that's coming. The rest, there's no big change.
So you'll be able to also enjoy markup on this increase, right?
Sorry?
You'll be able to enjoy a markup on this cost escalation that OEMs will have. So if 25% is the increase in diesel content and your average margins are say 8-9% or 10%, you will be able to make those margins on it. Or it is only initial phase, this will be just a cost pass through, and markup may not happen given the jump that is being seen.
Okay, I'm not clearly able to understand, but yeah, it will just be general, so we expect to have similar margins in the new products also.
Okay, so yeah. So that was the question. Yeah.
Okay. So we expect
my worry was that 100 becoming 125, you may not be able to mark up on the incremental 25, so reported margins would go down. Okay. That is not the risk. We're saying.
Yeah, we're expecting similar profile.
Similar profile. Is there any thought process on two potential opportunities? One, which is exports. How are you looking at it, especially on PV side or on tractor side? Because we have, is there an opportunity available? First, that's the first question. And if yes, are you looking at it, and how are you looking at it?
Sure. So there's a really big opportunity available when we look at the export market, and we are looking at two segments, right? One is the off-road or small engine segment where we can supply exhaust systems. We already do a little bit to one or two customers in America, but we really want to double down on that and add customers on the small engine exhaust system side, which is exportable product, right? And second is on the subcomponents, right? So one very good thing about our company is that we are backward integrated. And now, one or two components which are proprietary in nature also, we have just initiated now actually that the production is starting. We have started manufacturing in-house also, and they also have a huge export market. And we are working towards building an export fund, and definitely as things materialize, we will keep sharing. At this juncture, we do have good amount of RFQs, etc. And as we get success in the market, we will keep sharing.
So, how should we look at the time frame for this? Because generally, it's a 3 to 5 year cycle before you are able to make an inroad. Is it right to look at it, or it could be shorter time frames, and then you get the initial trial order, and then second round of order comes through? So is this the understanding right, that it could be a lengthy process from here on, even today, if we take today's base zero?
Sure. So we are hoping for a shorter time frame, and the reason for that is few. One, on the small engine side, the customers' profile is different. It is not, big OEMs, and their cycle of business development is traditionally shorter. On the subcomponent side, also the customers are not the big OEMs or the target customers. They are tier ones, and in the case of tier ones also, the business development cycle is shorter. And then third, there is a mega trend of China plus one, where global supply chains are really looking for an alternative to China, and they are also a little bit enthusiastic. And of course, India and a few other countries play as a very good alternative. So that mega trend also may help us shorten the cycle. But again, we are new to the export market. As of now, about 4-5% of our revenues is only coming from exports. So we will have to, wait and see. But we expect very good results and a shorter time frame than what you have mentioned.
Thanks. So just one question. So are you only focusing on US as of now, or even Europe is under consideration? Because given that you are starting, I just want to, okay, great, this is helpful. So last, if I can just fill in one more on this kinetic green, any updates on that and on the EV side in general, how are you looking at anything to share about it?
Sure. So on the kinetic side, one good news to share that, we have our first prototype ready and the first prototypes are under testing. We, of course, want to be 200% sure of the designs and test them extensively on the field before the manufacturing process, given, so in the industry we heard of various things. And in addition to that, now the government has shared the AIS Amendment 3, and we want these batteries to be compliant to that. So within that, the prototypes are ready and testing. And if things go well, some gradual, very minimal production should begin end of Q3, Q4, based on how the testing performance goes. So that is on the side of the kinetic GV. In the side of electric vehicles, our strategy right now is to develop powertrain agnostic parts, right? And to play in the EV field more on the two-wheeler and three-wheeler side, and try to utilize the cross experience that we gain from this kinetic GV and look for other businesses. But again, EV side, we want to first focus on phase 1, which are these battery assemblies for the GP, which are under testing. And on the powertrain agnostic front, there are definitely a lot of discussions are going on other potential products that we can add within our same customer base, as well as looking to revamp some of our existing verticals like the suspension vertical with possible technology tie-ups, etc. But as things get more material, we will keep sharing.
And if I can ask this on kinetic energy itself, kinetic green itself, that how are they pursuing the opportunity for themselves? Is it are they looking to become a most effective producer across OEM platforms, or it is only for in-house? Because this is an evolving space and a lot of things are happening over there. So is there anything that you can share on how they are thinking?
Sure. So with EV and especially this two-wheeler, three-wheeler segment, it's ever evolving, right? So there's changes almost every day happening. And I think kinetic is positioning itself to really play in the two-wheeler and three-wheeler market as well. And in terms of specific strategy of theirs, that is something that, I would not be the right person to share. But I think they're really excited about this segment, and they're enjoying good growth also. What we see in the market, that they are doing very well. In the last few months, they've really done well.
Okay, great. Thank you. Thank you very much. And all the best.
Thank you.
Thank you. The next question is from the line of Amarkant Kaur from Phillip Capital. Please go ahead. Mr. Amarkant Kaur, your line is in talk mode. Please go ahead with your question.
Hello?
Yes, sir. Please go ahead with your question. Your line is in talk.
So, my question is on RDE norms. So, in terms of its application, is it based on the production of vehicles by 1st April or on the retail sales? Do you have any clarity on that?
There still remains to be ambiguity there, and I think the customers are seeking clarity also. And there is some ambiguity whether it will be retail or production, and we are working on both scenarios till there's no clarity by the government.
Okay. And sir, on the RD itself, could you help us with what is the potential change and what would be the quantum of cost increases for that? So for the vehicles?
Increase, as in cost increase for the entire vehicle. So that's something I don't have the data for. I have the data only for our product and our side of it. I'm not very sure about what will be the overall impact on a vehicle. And for our side, diesel, we are expecting a 25% increase in our content, and for gasoline, 10%.
Okay. So would that be in the range of 15,000-20,000 rupees or more than that? Or any ballpark figure if you can give?
No, just very broadly, that this is a percentage because we don't share content per car anyway. So we're just giving a guidance percentage. But for car makers themselves, I don't know. That is something that is not our core competence, and the OEMs would better be aware of that.
Understood. Because I was asking this because different OEMs are indicating numbers that are quite different. Some are in the range of maybe like 10,000-15,000. So I just wanted to get a better understanding of that.
Sure. That's something that there are other products also, and there are other changes that they need to make. That's why they will have a much better view on the overall picture.
Understood. So that's it from me. Thank you for taking my question. Thank you, sir. All the best.
Thank you so much.
Thank you. The next question is from the line of Sharda from Systematics Group. Please go ahead.
Yeah, hi. Thanks for the opportunity. So first question, so assuming, let's say, the industry volumes or the production volumes remain, in FY23 remain as same as F22, we should see a 10 to 15% kind of revenue growth purely driven by content. Is that the way, we should see this?
Yeah, so if you can just repeat your question, you mean FY24 maybe, right? Or calendar year 20?
Right, FY24, yeah.
Sure. Yeah, so if all things equal, yes, but it is not so easy to measure our growth against traditional, industry growth when we look at PV and CV because we are engine linked. But yes, if the same number of engines and the same mix get produced, then it would be based on the gasoline and diesel mix, 10% and 25%. All things equal.
Got it. And is there, is there a big part which product mix also plays when we look at our products? So, with SUV proportion increasing in a big way, does that also have a very large part in how our top line growth has been for the last 2 years?
So our products are not so much linked to what we see in the market in terms of SUVs or fast cars and things like that. Our products are really engine linked, right? And then It's a little bit technical, but different customers have different strategies to meet the norms, right? Then it's choices of technology, etc. So that does have a mix play in it, and it's very technical to go through the varied strategies that customers can take to, meet these requirements. So that does have a mix play, but not what we see on the market like an SUV or a fast car or whatever else segment. So it's not segmented in that.
Okay. Got it. Thanks for that. The other question was on the technical partnership with Bestop for manufacturing of roof systems. So if you can just help us understand what are the plans here. Sunroofs are becoming a large part of the industry now, and I'd like to understand still a lot of them are still being imported or maybe coming in as a CKD kit. So maybe if you can just help us understand maybe what are we doing over the next 2 years?
Sure. So Bestop is a company that does convertible canopies and canopies, soft top canopies. So it's not a company that does sunroofs. And the strategy with Bestop is already good work has been done on one model in India. And we are looking at other applications of these kind of convertible canopies and soft top canopies in the Indian market. But this is a niche segment. This is not like sunroofs or...
So this won't have any applicability where you have a sunroof system?
Not this venture, no.
Okay. Got it. And finally, on the battery manufacturing JV with Kinetic, so I mean, is it fair to understand maybe in the next 3 to 5 years we intend to be 50% captive for Kinetic Green and 50% would be other OEMs, or this would majorly be a captive production for Kinetic?
Yeah. So the intention of the joint venture is definitely to build products for beyond Kinetic, but the EV space is ever evolving, right? And that's why we have to take it step by step. And the first step is to, get going on at least some volumes and start, really putting these batteries on the field. And then once there is stabilization, then we'll go to step 2. And just because the space is so fast evolving, right? But the intention is to look at other customers also and not just Kinetic. So the JV was signed with that intention.
Got it. So when you say phase 1, does that include BMS capabilities as well? Are we designing it and plan to have a manufacturing line for that as well, or that would come in phase 2?
Sure. For now, we want to be very asset light, right? So it is to assemble everything together and buying the BMS and buying the cells, etc. And just the overall designing and the assembly is where step 1 is.
Got it. Right. And you touched upon the exports part, right? So is there a market size, what, I mean, in the smaller engines, what you're targeting, how large is that market in exports? Any rough, any numbers which you can share? And in terms of capabilities, I mean, these units would be largely similar to what we manufacture in India, or I mean, given the emission norms are almost similar now in India and globally, or does that need much higher content or value addition?
Sure. So on the small engine exhaust system side, the very good news and the big asset that we have is that we have all the intellectual property, design, R&D available to supply to the global market, right? We are one of the smallest companies in the world with such technology. So we do have the capability to really now go towards the whole world and supply this product, right? Because the norms are largely same in America, Europe, everywhere. They're very similar now to Indian norms. And we want to, as just dabbling in the international markets, want to focus on this segment which is exportable, right? And we already export. So if you see about 4-5% does come from this segment right now. And we want to double down or, triple on this segment itself. And in terms of market size, it's exponential, right? It's just that it's right now the Indian market is a very small percentage from a value perspective of the overall market. So the addressable market is literally exponential, and even a small percentage or few percentage that we can take will really support our growth journey. But we want to again go step by step, and the first step is to start building more customers on the small engine front. Now coming to the component export, as we are backward integrated, we do already make a lot of these components in-house, but we do it for internal consumption right now for our internal plants. But now we want to utilize this core competency and utilize it for the export market as well. And there also the market side is very large because American and European market is of course much larger.
Got it. So just a follow up here, when we say small engine, I mean, what do we, in terms of global parlance, is that 2-liter engine or smaller than that, or is it 3-liter engine? I mean, because a lot of market is now getting consolidated in that 2-liter engine market. So is that what we are talking about, or even smaller than that?
Yeah. So, I don't have a literage available with me, but just to give you a flavor of the segments, it is, the small tractors, generators, construction equipment, and other cross usage of these engines, right? So there's no threshold per se as the literage or the horsepower, but more on the exportable nature of the product, right? So some are more compact than others in terms of their configuration. But just to give a flavor, these are the segments that we are looking at.
So passenger vehicle would be a long time away in that sense, that they are not the addressable market right now.
Yeah, passenger vehicles is something we are not looking directly because, the product is really big, the exhaust system, it can't really be exported. But within that, we can look at sub-components because those are exportable.
Great. Okay. Great. Thanks for answering the question.
Thank you. Thank you so much. Thank you.
Thank you. The next question is from the line of Apurva from Phillip Capital Private Client Group. Please go ahead.
Sir, thank you. Thanks for the opportunity. So can you just give the revenue breakup for the first half for CV, PV, and maybe is there any contribution from EV?
Sorry, if you can just repeat your question, there was some background noise.
I want revenue breakup for commercial vehicle or maybe LCV, passenger vehicle, and as well as the EV, because the EV4 is already implemented. So are we getting any traction over there?
I think you mean CEV4, right?
Yes, construction equipment vehicle.
Okay. So I don't have, because CEV is kind of small, so I don't have that number in front of me. But roughly for PV and CV, the breakup is that PV is approximately 44% and CV is 55-56%. Or 55, around that range. And for CEV, I don't have the breakup.
Okay. And so is there any change in the market share, and how do you measure market share? Because in our earlier conversation, what we used to say, we have almost 30% market share in PV and almost 15 to 20% in CV. So is that the number remains the same, and how do you exactly measure your market share?
Sure. So, because engines are cross-used, right, between passenger vehicles and light commercial vehicles, so it is a bit challenging to have exact market share numbers, but broadly our market share remains the same in both the segments. And when we say CV, it also includes LCV.
Okay. And sir, anything you would like to highlight on the regulation part? Because as EVO, even though it's implemented, but the revenue is not flowing into our P&L. So I think because of some leeway given by the government, because few companies have already started that product, but still that is not reflecting on numbers. So when can we expect significant revenue contribution for us?
Sure. So as I guided before, that TREM 4 or CEV4 is always going to be marginal. TREM 4 is not the big revenue side, but on the tractor segment, that the government has now posted a date of 1st Jan 2023. So it was originally meant to be October, now it's January. So I guess that's why the marginal revenues have not started flowing in. And based on the new date, we'll be able to get incremental revenue. The big one is TREM 5, and TREM 5 as of now is scheduled for 1st April 2024, but given TREM 4 has been delayed slightly, there could be a slight delay in TREM 5, but no notification. But that will be the big bang where, all the tractors will require a product. For TREM 4, it's a niche, and maybe for January, the revenues incrementally could show some from TREM 4.
Okay. So, sir, if I want to assess the revenue potential for FY24, so apart from this growth, organic growth in the industry, and then because of RDE, there won't be any material revenue coming from new regulations. Is it fair understanding?
The new regulations are RDE, right? So that comes in 1st April 2023. And then TREM 4, but BS6 RD is of course more significant. TREM 4 is not as big as, it's not really a big segment at all. That will be 1st Jan 2023. These are the two regulations coming in the next 1 year.
Okay, and for this Kinetic Green JV, if everything goes as per the plan, so what can be the revenue, maybe if you are expecting anything in FY24, maybe some initial guidance?
No initial guidance. We are going to go really step by step. And first is just to get going. Now it's under testing, it's under field testing. So we want to go step by step. So as of now, there's no guidance that we can give. But if all goes well, then we would have at least some revenue coming in from that.
Okay, sir. Thank you very much and all the best.
Right. And sorry, one thing I also that is thing that the CPCB 4 Plus also that will come 1st July 2020. That's another regulation. It's again a niche regulation for gensets, but it could have some marginal increase as well for our content.
Okay, sir. Thank you so much and all the best.
Thank you. Thank you so much.
Thank you. The next question is from the line of Nirvana Laha, an individual investor. Please go ahead.
Hi, am I audible?
Yes, sir.
Yes.
Yeah. Hi. Good evening, Ashim and the management team. So my question is regarding the BMS. So you said that you're taking it really slow. I wanted to understand on this technological expertise for batteries and BMS, where exactly is it coming from for the JV? So is it through industry hiring or is it through existing knowledge base between Sharda and Kinetic? I mean, assembly might be less technically intensive. Correct me if I'm wrong. But BMS would require some expertise, right? So where is it exactly flowing into the JV from?
Sure. And first, just a clarification, we are doing BMS selection right now, right? So we will select the kind of BMS and how it fits well into our design. We are not making the BMS right now, but the overall competency, it's a combination of three. So Kinetic, of course, has a good competency given the experience of producing two-wheelers, three-wheelers, and they have a lot of partnerships that also bring that forward. Second is definitely we are doing industry hiring as part of the Kinetic team and a little bit in terms of the joint venture team. And then third, Sharda has a very good competency of managing complex products as well as buying in scale and program management. So the combination of all three is being utilized for bringing these products.
Okay. So BMS design, I mean, the JV was launched with a view of making BMS as well. So, like, I understand you're taking it slow step by step, which is the right way. But in terms of the roadmap internally, when do you think, if everything goes right, will you be in a position to manufacture BMS? And do you already have the capability to do that in the JV? Or will it have to be built?
Sure. So in terms of the timeline for making the BMS, we don't have any guidance that we can give in terms of the timeline. In terms of capability, definitely partnership would be required. And there is a partnership that we already have. And there are various conversations around this that the joint venture is having in terms of BMS partnerships. But again, there's nothing material. So full focus is on the first phase again to really get started with the assembly. And no firm guidance right now in terms of BMS manufacturing, etc.
Okay. And as far as I understand, in a two-wheeler, a battery along with BMS, etc., contributes, say, around 40% of the sale value of the vehicle. Will you be in a position to help us understand the BMS system plus the assembly part of it, not the manufacturing of the cells, etc., but the assembly and the BMS? How much value addition would that be doing if the vehicle was 100%?
I don't have that data with me, but I could seek that data and report back to you. But I don't have this data offhand.
Okay, all right. I think last year in one of the calls you had mentioned that if everything goes well, beyond the supply to Kinetic, you would look at EV subcomponent supply. I mean, EV battery and BMS subcomponent supply to others. Could you tell us what subcomponents these are exactly?
Yeah, so these are just parts which go within the assembly, and there are various small parts that go within the assembly. One of the parts which is most interesting is battery cases. But again, that there is nothing that has moved forward on that front, right? But there are various components that the battery is built with.
Okay. So final question on BMS. So you must be scanning the space, so I'm sure you're aware that an extrusion company set up a JV in the BMS space about, I think, 3 years back, and they are posting good numbers, and they claim to have 15% two-wheeler domestic market share in BMS right now. So given that rapid scale up and coming from a company which did not have previous expertise, and they supposedly gained it via JV with a European supplier. So how do you see this market evolving, and do you feel that the JV needs to move fast and it's a game of who moves fast, or do you see that there's enough runway if we do it the right way to even take it slow?
Sure. So we are fully focused to first get going, and step one is where our eyes are. In general, there are a lot of good opportunities. The way we read the market is that the adaptability and flexibility will win in the long term, because it's an ever-changing market and technology shifts quite often, right? So the more adaptable and flexible our manufacturing as well as team is, I think that will be the strategy that we are taking, rather than it being a race towards the existing technology, right? And that's why we want to, for the time being, be asset light and really look at it and learn more about it before we take the next step.
Right. So Ashim, that approach seems to signal that you are really digging in for the long term and trying to build capabilities. So towards that end, is hiring really happening of that quality or of that aggressiveness in order to build those capabilities? We have been scanning in the market to see. We have seen some signs of it on kinetic end, but could you comment on that, on capability building? Are we also taking it slow there?
For the joint venture or for kinetic?
No, for the joint venture, and I mean, in order for the joint venture to deliver value, whatever hiring needs to happen either in the joint venture or at kinetic, is that happening in the satisfactorily? Because the strategy you mentioned seems to be hinting towards building a deep capability and then moving big when everything's in place.
Sure. So I can't comment on kinetic front, because that is their business. On our own front, we are building the team required for step one. And also as part of our strategy, we are lining up the right resources. And that is where we are. It's, I think, initial, right? And as we have some, material information, we'll keep sharing.
Okay. So final question, this is not related to BMS, but this is related to adjacencies to our current, emissions business that we have for PV and CV. So first question is that I understand the sensors, the NOx sensor, oxygen sensor, or even the AdBlue dispenser, etc., the components that have come in BS6, those are not manufactured by Sharda, right? Those are provided by multinational third parties. Am I right?
Yeah. So that is for few products, what you mentioned. Those are manufactured by suppliers, right? And we don't manufacture any of the products that you mentioned.
Right. So, and even for the catalytic converter, can you help us understand what is the value addition that we do? Is it only the canning part and the remaining thing comes from a third-party supplier?
Sure. So we do the complete integration, and the catalytic converter has a thing called the catalyst. That is the third-party supplier. And we do the complete integration and designing of the entire system. And that is on the hot end side. And there is also the cold end side, which deals with NVH, and that is, the muffler, etc. And that's something that we do in addition to that. So it's all the way from the engine till the tailpipe, which has both the emission as well as the NVH part. So on the emission part, we do the integration, the canning, as well as the full designing and supply it to the OEM. And on the NVH side, we do the muffler making, the pipes, etc., and we supply to the OEM.
Right. So my question is that we seem to be on the mechanical plus fluid dynamic side of the emission system and vibrations, etc. What is the possibility of moving into the adjacency of electronics to, or even AdBlue dispensing to sort of provide a complete package to customers? That would be very valuable, I assume, but is it practical to hope that Sharda could move into that space?
Sure. So I think the subject that you're referring to is extremely technical, right? And just for this particular call, I would just say that in general, we are looking at further adjacencies, etc. And as full integrators, right now there is no intention. But if ever an opportunity presents itself, we would always look at it. And there are a lot of other technicalities which I won't go into of what you're referring to in terms of this.
Okay, Ashim, I would write to the investor relations team. Hope I can get a response there. And thank you so much for patiently answering the questions. Wish you all the best.
Thank you. Thank you so much.
Thank you. The next question is from the line of Manpreet Arora from Arora Wealth Advisors. Please go ahead.
Yeah, thank you for taking my question. So, am I audible?
Yes, you're audible.
Yes. All right. Thank you. So, Ashim, on the TREM 4, TREM 5, or rather on the TREM 5, the question, so, we understand that there have been some concerns or pushback by the tractor manufacturing bodies with respect to TREM 5, not only because it will raise the cost of these tractors, and there's a, election year coming in a couple of years, but also because of the typical Indian agri conditions where, farmers also use unclean fuel and stuff like that. So how do you, assess the government's willingness to push through this legislation? Do you see that TREM 5 will see the light of the day because of the cost increases, or do you see it going, delayed further? Just color if you can give me that.
Sure. So, one thing about the government that it is definitely very, very much for the clean air initiative. So we are quite sure that they will go ahead with all clean air initiatives. In terms of the timelines, right now the first is TREM 4. That's something not just because of the challenges you mentioned, but also COVID and few things took place, that they have put the date to 1st Jan 2023 for TREM 4. And for TREM 5, as of now, it is 1st April 2024, but whether a few months they push back, that is very hard to predict. But in general, I can tell you that all customers are prepared for TREM 4 and they're preparing full swing for TREM 5 products as well. So that can be a good signal because the end customers are also fully preparing for the legislation. So that gives us a very positive feeling that this will definitely come to light.
Thank you. Thank you. Just to follow up on that, Ashim. So, we understand that there are several steps when we do a TREM 5 rollout. We'll start from a prototype to calibration to do a field validation of it and then only sign off before final launch. So do you know at which stage are we with respect to TREM 5? Are we already in the field validation stage? Are the OEMs in the field validation stage with respect to TREM?
So all OEMs are progressing well. Now, different OEMs will be at different stages, right? But all are progressing well and working towards TREM 5. And in terms of specific customer stages, etc., that of course we cannot disclose. But as a general trend, all are progressing well and preparing for these norms.
Okay, thanks. And, on the legislation side, potentially, let's say if, TREM 5 gets delayed, do you see that potentially maybe CEV 5 gets implemented before TREM 5 because CEV 5 is more on the construction equipment vehicle side and doesn't impact, farmers that much? And is there a possibility that CEV 5 comes before TREM 5?
Sure. I'm not, I won't be the right person to tell about the, chronology. We can go as per what are the notifications and guidance given by the customer as well as the government. But in general, CV is a much smaller market than TREM. Reason for that is just in numbers, construction vehicle industries, just on a number basis, much smaller than the agri-tractor market in India. So I'm not sure on the chronology of it. And of course, the focus is more on TREM than CEV. In addition to that, there is the CPCB norms, which are also norms which will go into gensets, and they also have a different cycle. But on all fronts, we are seeing very positive momentum and very strong preparation by all the customers. So that's a good signal, I think, for us that all the customers are taking this full swing.
Okay, thanks. So just to follow up there, on the CEV side, you said it's potentially a smaller market. And so do we already have relationships with the CEV OEMs? I mean, I know we have for TREM, on the tractor side we do have, but on the CEV side also we have relationships.
So, there's a lot of cross-relation between engine usage in CEV and tractors. And the way the engines are cross-used, a good percentage of them are used by, the different engine makers and then different, final appliers of those engines. So we have good relations with either people who will be supplying engines to the CV market and some CV makers also.
All right. Thanks. That was very helpful. One final question on the subcomponent export side. Just to understand the subcomponents a little better, on the exhaust systems, is it, would mufflers, resonators, would they qualify as subcomponents, or are subcomponents even at much more, granular level than that?
It is more granular, one level granular to that.
All right. Thanks a lot. I will get back to you.
Thank you.
Thank you so much.
The next question is from the line of Ankur Shah from Concall Capital. Please go ahead.
Yeah, thanks for the opportunity again. So one broad question on the strategic front. So considering, sort of a clear understanding that we are a engine-based company and the kind of growth which is visible for 2 years, the products will grow. But, we have been a proprietary company, a proprietary product company. So apart from the exhaust system part, which is, eventually going to get phased out, how are we thinking as a company, like from a company angle, what are we trying to develop, or how are we trying to develop the company itself for the future?
Sure. And, one just to share that our core competency or success factor has been customers, right? We are very customer focused as a company, and these relationships have only helped us evolve to where we are into a proprietary company because we work very closely with our customers. But I'll give you a flavor of our strategy for the next 5 years and how we are looking at the market. So first, we see that the tractor segment and the CV segment will grow, and it will grow substantially in the next 5 years. In addition to that, also we see with content increasing, even few other PV cycle also. So we want to maintain or increase market share in domestic LCV and PV for exhaust systems and focus on RD and future norms. We want to gain market leadership in the domestic tractor market, which is going to be, of course, TREM 4, but more importantly, TREM 5 as well. Then we really want to build focus on the export of the subcomponents as well as these emission systems for the smaller tractor, gensets, etc. that I mentioned, which is a really big increase in our addressable market. In addition to that, we want to utilize the build-buy approach for powertrain agnostic products. So we are looking at possibilities to revamp our suspension vertical and, of course, look at tie-ups and or acquire companies with powertrain agnostic products so that we continue to play in all powertrains. And then, of course, we want to dip our toes into the EV field, but focus more on the two-wheeler and three-wheeler segment And then, as we're dipping our toes, evolve there also with more partnerships, tie-ups, as well as going on a CapEx light model. So that is really a vantage point in terms of the next 5 years.
So like you mentioned that, we'll be focusing on powertrain agnostic products. So, just like from a competitive angle, now let's say all the companies where we try to talk to, they are having a similar strategy. So, do we have a base plan in our mind that, which kind of products we want to focus in? Where do our capabilities lie? Where can we have a proprietary product base where, we can have some research and development strengths so that, the ROE profile which the company has been maintaining since the last so many years. Because if let's say by any chance you go into a normal commodity product, it is not going to allow you to make the ROEs which you make in exhaust systems. So from that angle, have you thought of it on a very specific basis? Because yes, obviously, the future is for the non-powertrain products, but on a specific basis, if you can, throw some light on that.
Sure. So one that we have actually, done a very similar exercise to what you are just saying, and that we have a short list of products, and that's where our discussions on M&A, JVs, etc., centered on the powertrain agnostic side. But just we would not like to disclose till there is nothing material, but very similar to the flow of logic that you just mentioned is what we have done this exercise on.
Sure, sir. Wish you all the very best. Thanks.
Thank you. Thank you so much.
Thank you. The next question is from the line of Tarun Sancheti from Sanchay Nidhi Limited. Please go ahead.
Thank you for taking up my question again. Just to confirm, am I audible again?
Yes, you're audible.
Thank you. The follow-up question, Ashim, is that, and I think, perhaps I asked this last time also, what we understand is that some of the key CV OEM got their own JV or sort of a technical partnership or a subsidiary working into exhaust system itself. Keeping that in context, our partnership on CV space, will it not be very challenging for us to scale up and increase the market share, given the fact that those CVs already have their own captive capabilities? And even if, we are able to do some bit of a cross-selling, how significant that is going to be?
Sure. So the CV space, the joint ventures that you're referring to are on the broader emission systems, right? And they're usually engine plus emissions, and it's not our product. The same companies also outsource this product that we are doing. So in the entire market, there is a full opening for us to build the canning aspect of it, right? But the joint ventures are more on the engine front and the engine linkage front, not so much on the after treatment system, what we are doing. The content we have, there are no JVs right now that these people have, and they have no intention also.
So in a way, is it right to conclude that upstream processing happens at the JV level or the subsidiary level, and from there on, we take up the canning work or the assembly work? Is that the right
exactly way? So our part of the value chain, that is completely open for resourcing. Upstream, there are, on the engine and engine linkage front, I think two of the commercial vehicle makers have JVs for that.
Yeah, that's right. Okay. Another bit would be that, again, more broadly from an industry landscape perspective, if you can help with who would be the key tier 1 or 2 suppliers to CV OEM apart from us?
Sure. So we have 2 competitors broadly on the CV, and they'll be the same in the tractor market. And very few people in general have this technology in the whole world. And we don't name competitors on this call, but again, that there's an American large company who's in this market, as well as a French large company who's in this market, and there are 2 competitors. And maybe there are some very small emergent these things, but they're minor share. I would say 95% of the business that is not with us would be with these 2 companies.
So the multinationals that you referred about are doing pretty much the canning and the assembly work that we do.
Yeah, exactly. They do exactly the same what we do.
Okay, fair enough. And again, directionally, at least from an internal budgeting perspective, what is the sort of market share that we are looking at for ourselves in, let's say, 2 years time frame, and extending that horizon over a period of, let's say, 3 to 4 years time frame? What is the market share that we are looking for ourselves in the JV SOR system?
Sure. Nothing that we can share as of now as guidance, but of course we are always looking to increase market share, but nothing that we can share as per guidance as a number.
Fair enough. Thank you.
Thank you.
Thank you.
The next question is from the line of Sonal from Bowhead. Please go ahead.
Hi, Asim. Congratulations on your best quarter ever.
Thank you so much.
Couple of questions. Am I audible to you clearly?
Yeah, you're audible.
Great. So firstly, wanted to understand if you would have the data for your growth in exports in Q2, and who heads the initiative, and any new senior hires you've done in the last 1-2 years, either in India or with on-site presence.
Yeah. So exports, we are maintaining status quo as in terms of sales in Q2 right now, because of course anything that's developed takes a couple of quarters to come. In terms of a network, we would say newly creating an international sales team, right? And there's no person as such that we have earmarked from outside. It's an internal person which we promoted to this position, and he's building an international sales team for the export side.
So in terms of capability, would you say that you are in the early stage of it and it will get built over a period of time, or would you be in a late stage of it?
The sales team or the capability side, in terms of getting it, this is an initiative which we started a year ago. So I would say that we are in the middle of it. We have had quite a few people join into this team, and we expect to get some more people in this field who has good competency in international business development. And this is one of our prime areas from a team building perspective as well.
And if I heard you correctly, you said your LCV market share is 15-20%, or was my understanding incorrect?
Sorry, if you can just repeat that.
If I heard you correctly, did you say that your LCV market share is 15 to 20%?
No, we didn't speak about LCV in the call today. I think there was a question on CV or something like that. No, I did not say LCV. LCV would be a higher market share.
So can I say when you say 30%, because you don't have the breakup of LCV in car market, you actually mean you have 30% combined market share because you're looking at the total volume of engines, considering you don't have the breakup. Is that a fair understanding?
In a broad level, yes.
Great. Secondly, between your diesel and petrol mix in terms of volume or value, whatever is possible for you to share at a very rough level, what would that be?
I don't have that mix breakup right now between petrol and diesel, but we can look internally and get back on that.
And would you expect your diesel mix to deteriorate, considering the price hikes on the diesel side would be way higher than the petrol side? Are you preparing for it already?
Sure. So I think anyways, mostly diesel is used on the LCV side and on this what you call the CV side. It's not so much used in patch cars. I think patch cars it's anyways less. And on LCV as well as CV, it's really between diesel and CNG, and both the prices are up because CNG prices have also substantially gone up because of this geopolitical situation that we are in. So yeah, so I think diesel would be largely more toward the LCV and CV segment.
Okay, and just to reiterate what one of the early participants had asked, just wanted to reconfirm. So let's say, we sell a vehicle at $100, there's a 25% price hike, so the price of our part of the product which we supply, the exhaust system becomes $125. So if you are making an EBIT of 10, let's say on this 100, our EBITDA would become 12.5 at a rough level, so that the EBITDA margin in both cases is 10, In first instance, 10 divided by 100. In second instance, 12.5 divided by 125. Or is my understanding incorrect?
Okay. Just because, on a call, it's tough to articulate the exact thing that you're asking, but yes, that the profile gets maintained, right? So if there's a value addition, then we maintain that profile on the value addition as well in terms of content increase.
Great. That's nice to hear. Secondly, I also wanted to understand, so the TREM 4 was originally meant for September 21, and now it's coming in January, 23, and COVID is over now for some time. So what were the reasons, at least for the last leg for it to go up, and, is it also possible that TREM 5 could be postponed by, a year or so, as one of the participants said that, if elections are scheduled in April 24 or May 24, it's highly unlikely that at least on April 24 this is going to happen.
Sure. So I'm not, very good in terms of giving guidance on, what may be the thought in the government. But what I can say is that the signal is very strong from our customers and preparation is very strong. Now, there's a slight delay, 3 months, 6 months, whatever. It doesn't have a very big impact, right? And I think that's very visible in the case of TREM 4 also. Even if there was a delay, there's no visible impact in terms of, the delay, because we are generally capex light only, right? So it's difficult to predict at this juncture, and I think we have to take it, as per the government notification. And the government notification as of now has come in for TREM 4. And the future, the customers are already preparing. So there can always be a slight delay.
But you are not building in your base case a 1 year or 2 year delay?
There is nothing as such that, we have guided towards. But there can always be based on the TREM 4 delay to 1st Jan.
So if I have to just see the drivers for growth from next 24 months perspective, the first one, the larger drivers, would be, basically your RE norms, right? And in terms, and then at a later stage, TREM 4, and on a medium term, as and when you get traction or exports or MHCV market share gains, and the EV initiatives. Is my understanding in terms of order? I'm not talking about small numbers which could change volume or revenue by 2-3%, like cranes, etc. I'm talking in the larger picture. If you look at from a 3, 4, 5 year perspective.
Sure. So I think the immediate definitely is BS6 RDE, which is the big one, right? Which is coming in shortly, and their full preparation, everything is there for your 1st April 2023. Some very marginal growth will come from CPCB 4 Plus, which will come in July 1st, 2023, as well as TREM 4, which will be 1st Jan 2023. In the horizon after that the norms that come in are definitely TREM 5, CV5, and expansion onto the BS6 norms, or there could even be BS7, but as of now, BS6 norms. And of course, the growth drivers from the export side of the business as well as the subcomponent business, which would start yielding results towards that time horizon. In addition to that, we are parallelly actively looking at M&A opportunities on the powertrain agnostic space, and deployment of that could also be a growth driver. And even on the build approach, we are in discussion with customers for powertrain agnostic products, and there are few that have been identified, but around that time horizon, that would be another growth driver. And then, of course, the beginnings of the EVs right now, but we hope that we can play a much more significant role in the medium term on the two-wheeler, three-wheeler side of EV. So this is in a nutshell the growth drivers.
Well, thank you, Asim. This is very helpful. My last question. As far as your standalone business is concerned, do you reckon that, your Q2 would be your peak quarter because of the volumes overall for the car industry, or do you see a possibility of this repeating in Q3 and Q4 also, Because what we understand is that the car makers have, the replenishing inventory for various models, and that part is more or less over. So based on order book at least, whatever, I understand you won't know what will happen in Q4 or Q1 next year because, you have only that much visibility. But do you think there's a possibility that in Q3 also we can repeat this kind of performance?
It totally depends on the market environment, right, and how the markets perform and the OEMs perform. Right now, there is no guidance that I can give. The momentum is there, but it totally depends in the absolute short term on how the customers are doing and their plans really in terms of production, because we really are linked to production more than even sales. So it totally depends. It's hard to give guide on this. But the momentum so far is good. But given the macroeconomic environment, it's very hard to predict that there's a lot of volatility in the world, of course.
Thank you, Asim, so much for answering my questions, and congratulations once again for a great quarter, and I wish you luck for the subsequent quarters as well. Thank you.
Thank you. Thank you so much.
Thank you. The next question is from the line of Karthikeyan from Suyash Advisors. Please go ahead.
It's a fairly long call, and I'm sure you're bored, so I'll try and make it interesting. Just one thing, if you can share with us your best understanding of the pain that Ebers Parker is facing in Europe, and therefore what kind of opportunities someone like Sharda can benefit out of from that.
Sorry, what's the first part of the question? If you can just repeat.
I was asking you the kind of pain that Ebers Parker is facing in Europe, given all the challenges over there, and therefore are you seeing specific opportunities emerging, in a more time-bound manner versus open-ended manner?
Okay, so I would not share specific to any company, right, even this thing, but I can just talk a little bit about the broader things, what we are seeing in Europe and what I think companies are experiencing. Of course, it's been last 2-3 years have been a lot of pain in Europe, given that there was COVID, and then there was the semiconductor issue, and then there's this geopolitical crisis, which has led to an energy crisis, and so on. So, plus Europe is really dependent on the China supply chain also. So this trend of looking at alternatives to China and this China plus one strategy, I think European as well as American companies are, fully engaged in this mega trend, and that brings an opportunity for companies like us who can increase our export market.
Given what you say, how soon can we expect some kind of announcement? I know I know it's not fair to pin you down, but I'm just wondering. This conversation has been happening for a reasonable amount of time. So, are there any near-term?
I know. Sure. There's no timeline as such, because these kind of things we can only do as we have something material to offer, right? So it's totally dependent on the success of our business development team, and the efforts are on. Opportunity is there, and when there is something material only, we would share.
One last detail. I know this has been asked in 3 different ways, but in very obvious terms, so the RDE increase in content for the diesel side, the 25%, would the share of manufacturing be a substantial part of it, or would the outsourced component be a substantial part of it?
For diesel?
Yes.
For diesel or for gasoline? So just gasoline is 10%, diesel is 20-25%, and that would be on our value-added side.
Oh, so the entire 25 accrues to the manufacturing side?
Yeah, 20 to 25 would accrue to the manufacturing.
Oh, okay. So this doesn't have any component of, say, catalyst sourcing or any of those things. That is a bit more valuable than what you suggested earlier. So.
Yeah, so we are just, when I'm giving this kind of guidance, we're giving on value-added number, right? So we are not including the catalyst in the base also, and neither in the denominator, neither in the numerator. So just to neutralize for it, and the guidance is based on that.
That's significant. Very, very helpful, and thanks for the extremely patient answers. Much obliged. Thank you.
Thank you. Thank you so much.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Manpreet Arora from Arora Wealth Advisors. Please go ahead.
Yeah, thank you again for the follow-up. Just one bookkeeping question first. On the inventories side, and we see that there's been substantial increase from 131 crores to 190 crores of inventory. So if you can provide any color on why the significant increase, is it because of the increased scale of operations, or if you can provide more color on that?
Sure. So, I think inventory better to measure in terms of number of days, right? And because, of course, as our sales grow, so will inventories grow. So it's only a few days that inventory is up by, and we are keeping more inventory just to secure ourselves from all the supply chain issues. But it's just couple of days. It's not as much, because if you neutralize it for the sales growth also, it is not a very high number.
Okay, thanks for that. And then, just a question on the, how the industry operates, Ashwin. So let's say there's a new engine program, and, we will get some RFQs or RFPs for that, and we'll respond to that. So what differentiates, Sharda, when we get into an engine program? Is it the price, or is it the technology? What differentiates us? And also a follow-up to that is, when a OEM decides on a vendor like Sharda, is it like one vendor per engine program, one supplier, or to de-risk themselves, they'll have two of them, and one engine program can have multiple vendors? If you can give more insights into that.
Sure. So first, I'll take the second question, that in the case of one engine, usually it is one supplier, sometimes it's two suppliers, right? So it really depends, but usually they tend towards going towards one supplier only. But there are exceptions to that, right? And there are exceptions, but I would say most of the time, just because the effort to develop a supply in this product is a lot from the OEM front also. Now, what is the key differentiator or competitive advantage that we have? Number one is the R&D, right? So we have extremely good setup of an R&D in Chennai, where we have 150 engineers, which have extensive experience, and we have also been doing R&D in this product since 2009 now, right? So 14 years of Indian experience on these products, which no other Indian company has. And even a lot of the global companies, they also really appreciate the facilities that we have in place, where we have an end-to-end R&D center with very good technology available for these products. And only our multinational competitors, and largely only 2 or 3 companies, have a similar technology. So we are actually the smallest company in the world with this kind of technology. So that's something for all of us to be proud about. Then second, these products which are BS6 Plus, these are extremely technical and complicated products, and all the customers are looking at product experience in the field. So let's say that if there is a new supplier who does not supply these products, wants to enter this domain, they won't be able to enter it, because OEMs require past experience, right? And we have now developed very successful products onto the market, and that gives us further competitive advantage. In addition to that, we are quite backward integrated, and we make a lot of our proprietary stampings as well as key components, which gives us a cost advantage as well as a supply reliability advantage vis-a-vis the competitors. And lastly, the manufacturing technology also for these products is very proprietary, and that is also something with a lot of experience over the years that we have developed, and which gives us a further boost and competitive advantage.
Thank you. And just going back to your first point, so to understand you correctly, then if there's usually a one supplier to an engine program, so that it means that for the entire life of the engine, that vendor is locked in, and till the time that engine is in the market, the business is with the approved supplier. Is that correct way to understand?
It is, again, there are exceptions. I'm saying the tendency is there, and then engines go through regenerations, and then there are new norms that kick in, like now BS6 RD is kicking in, so they're going for recalibration and all. So up to the next emission norm, generally that is the case, but there are always exceptions. So I'm just giving you a directional tendency rather than it being all in rule.
Okay. Okay. Thanks a lot. And one on the CV side, you've been patiently answering a lot of questions. So, from the field, what we have realized, we've seen is that a lot of fleet operators are, not happy with, or not happy, I will say, but with the BS6 engines, you have this additional requirement of the DEF or the AdBlue, and they are not very happy with this new change, and I've seen some OEMs also talking about moving to CNG CVs. So, if there is some shift towards the CV side in the CNG in the CV space, if there's some shift towards the CNG side, are we also in that space, and will it come from our standalone entity, or will it still be through our joint venture?
Sure. So we saw a good shift towards CNG, or we saw some, lot of traction, I would say, in CNG probably pre-Ukraine war, right? But I think after CNG prices have also come up, we've seen a slowdown in the market regarding CNG. But in general, I think all customers are looking at being, agnostic to changes. So they are preparing on all fronts. And in terms of the application of these products, that would determine whether it would be on the standalone entity or whether it would be in the joint venture. It depends on the application, engine size, etc. So it will depend on that.
Okay. Thanks a lot. Appreciate all your answers, Ashwin. And all the best.
Thank you. Thank you so much.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Puru Agarwal for closing comments.
We thank you for your participation in our earnings call today. We hope we have been able to address all your queries. However, if you have any further questions, you can get in touch with our IR advisors, Strategic Growth Advisors. Thank you and have a good evening.
Thank you.
Thank you. Thanks.
Thank you, sir. Ladies and gentlemen, on behalf of Sharda Motor Industries Limited, that concludes this conference call. Thank you for joining us, and you may